A king once begged a banker for mercy, not on a battlefield, not in chains, but in a candlelit chamber thick with incense and humiliation. The ruler of a proud nation, draped in silk and gold, leaned forward and whispered the question that would redefine power in the modern world. "Will you extend my credit?" In that moment the crown glittered, but the ledger ruled. For most of history, power was simple. It wore armor and commanded armies. Kings taxed their subjects, minted coins with their faces, and declared wars. But somewhere between the medieval marketplace and the marble halls of modern finance, something shifted. Debt became more powerful than the sword, and the men who controlled money began to shape the fate of empires. This is the story of how bankers became more powerful than kings. Welcome to Behind the Money. We're here to decode the financial world, revealing the stories, the systems, and the power plays that define our modern era. If you've ever wondered about the real story behind wealth and influence, you're in the right place. Subscribe now, and let's uncover these secrets together. You'll never look at money the same way again. Long before skyscrapers pierced the clouds of New York and London, medieval Europe ran on trust and coin. Trade was dangerous. Roads were plagued by bandits. Yet commerce had to flow. So Italian merchants invented a quiet revolution, the bill of exchange. With a signature and a seal, a merchant in Florence could deposit gold and receive a letter promising payment in Bruges. No heavy chests. No highway robbery, just paper and trust. Banking families like the Medici turned that trust into an empire. They held no ancient crown. Yet by the 15th century they controlled the papacy's finances, funded wars, and decided which rulers received loans. Kings could command soldiers, but the Medici could cut off their money, and armies do not march without pay. When England's King Edward III defaulted on enormous loans in the 14th century, it didn't just embarrass him. It shattered major Florentine banks. The Bardi and Peruzzi families collapsed under the weight of royal debt. It was one of the first great lessons in global finance. Lending to kings was profitable until it wasn't. But bankers learned, they adapted. They demanded collateral, influence, concessions. By the 16th century, the Fugger family of Germany financed the ambitions of emperors. Jakob Fugger, known as Jakob the Rich, lent vast sums to Charles V, effectively securing his election as Holy Roman Emperor. Votes were bought, thrones were financed, and the Fugger fortune ballooned. Pause and consider the irony. The most powerful ruler in Europe owed his crown to a banker. Who truly ruled? The man wearing the crown or the man holding the debt? As centuries turned, wars grew larger and more expensive. Gunpowder, cannons, standing armies, these were not cheap. Monarchs faced a dilemma. To fight, they needed money. To get money, they needed lenders, and lenders demanded reliability. Enter the Dutch Republic in the 17th century. Unlike monarchies drowning in royal debt, the Dutch pioneered something revolutionary: public credit backed by representative government. Investors trusted a system where taxation required consent. The result? The Dutch could borrow at lower interest rates than any king. Soon, England followed. After the Glorious Revolution of 1688, Parliament gained control over taxation. In 1694, the Bank of England was born not as a royal piggy bank, but as a company lending to the government in exchange for privileges. This created something astonishing: the funded national debt. Instead of fearing debt as a weakness, Britain transformed it into strength. When France faced Britain in the 18th century, both had brave soldiers. But Britain had something else: credit. It could borrow cheaply and endlessly. France, bound by an absolutist monarchy, staggered under its debt. By 1789, France's treasury was empty. The king couldn't tax the nobility. Creditors lost faith. Bread prices soared. The people revolted. The French Revolution was fueled by philosophy and hunger, but also by financial collapse. Across the Atlantic, the young United States faced the same problem. The nation's survival hinged not just on independence, but on creditworthiness. Alexander Hamilton understood this. He argued that the federal government should assume state debts and establish a national bank. His vision was radical: bind the wealthy to the success of the nation by making them its creditors. Debt, he argued, if not excessive, would be a national blessing. And he was right. But if national banks strengthened governments, private banking dynasties began to transcend them. No family symbolizes this shift more than the Rothschilds. In the early 19th century, Mayer Amschel Rothschild sent his 5 sons to Europe's financial capitals. While kings relied on couriers, the Rothschilds had brothers. They shared information faster than governments. They moved funds across borders with precision. During the Napoleonic Wars, Nathan Rothschild in London allegedly received news of Napoleon's defeat at Waterloo before the British government did. The legend reveals a deeper truth. Information and capital had become weapons. The Rothschilds were not loyal to flags. They were loyal to stability and repayment. Then came the age of central banking. The 19th and early 20th centuries witnessed financial panics that shook economies. In 1913, the United States created the Federal Reserve. These institutions held extraordinary power. They could set interest rates, influence inflation, and act as lenders of last resort. Kings once debased coins to solve financial crises. Central banks could create money with policy decisions. After World War I, the United States emerged as the world's leading creditor. Wall Street mattered more than Versailles. When the stock market crashed in 1929, the consequences rippled worldwide. The lesson was brutal. When finance fails, democracy trembles. After World War II, a new financial order emerged at Bretton Woods. The International Monetary Fund and the World Bank were created to stabilize currencies and fund reconstruction. The U.S. dollar became the anchor of global finance. No king orchestrated this system. Economists and bankers did. And then, in 2008, the world witnessed a moment that crystallized this transformation of power. Banks had created complex financial instruments that unraveled. Credit markets froze. Giants like Lehman Brothers collapsed. Governments faced a terrifying choice: let the banks fail and risk total economic collapse, or rescue them with public funds. They chose rescue. Taxpayers bailed out institutions deemed too big to fail. Protesters filled the streets. The anger wasn't just about money, it was about power. Because power in the modern world is often invisible. It lives in interest rates and bond yields. It moves through electronic transfers. It does not wear a crown, but it can humble those who do. Consider Greece during the European debt crisis. An ancient nation, the cradle of democracy, found itself negotiating bailout terms with central bankers and creditors. The ballot box still existed, but the real leverage lay with the lenders. The story isn't about villains. Banking has enabled extraordinary progress. Railways, factories, technological revolutions all required capital. The same system that can constrain governments can also empower them. Today, elected leaders consult central bankers as closely as generals. Markets react instantly to political speeches. Rulers once feared rebellion. Now they fear bond markets. Imagine telling a medieval king that one day, decisions made in a committee room of economists could sway global markets more than a cavalry charge. He might laugh until he needed a loan. So when did bankers become more powerful than kings? There was no single coronation. It happened gradually, with ink and signatures, with bonds and balance sheets. It happened when rulers realized they needed credit more than conquest. The crown still shines. Presidents still give speeches. But behind the pageantry stands a quieter force, the architecture of global finance. Invisible, complex, indispensable. A system where debt is leverage, and those who manage money can shape the destiny of nations. While crowns may dazzle, it is often the ledger that decides. Thank you for watching. If you found this story fascinating, be sure to like this video and subscribe for more deep dives into the hidden forces that shape our world. See you next time.